All right, welcome to Picking Strong Stop, live day trading here, week two. Just a quick update. I kind of oh, I confused my weeks. I thought I was going to have the CPA on this week. It's actually next week. So sorry for that. The CPA will be on next week. I put them on for the 26th, but we have a couple modules that we'll go over this week. And let me just get NAR accepted here, and we'll start in a few minutes. All right, I'm just trying to get NAR here and we'll get started. So again, I confused the weeks as far as the CPA. The CPA will be on next week. That's my fault. I had the wrong calendar date. What's going on, Mr. Hamad? All right.
All right.
Hey Malik, you good?
What's up, brother? How are you? You hear me?
Good, good. Yeah, I can hear you.
Sounds
Hey,
good.
I messed up my dates. I just looked at the calendar. I had the CPA on for the 26th. So I thought it was, I don't know. I looked at the wrong date, so that's my fault. So the CPA will be on next week if anybody's interested. But we'll get started. We have our modules here and we'll get going.
Let's do it.
Let's do.
How's everybody doing today? I wanna see the comments. All right. I hope y'all doing well.
All right. So for this module, we're going to talk about picking a strong stock. Now that's going to be different for everyone. You know, some people look for stocks that have momentum and low float. Some people look for just different categories. I'm just going to kind of give a general idea, and then I'm going to let also Malik kind of shine in on what's a strong stock for him. So we got Ali Dafar said, I'm good. How about you? We all good here. Nydia with the thumbs up. Okay,
Great,
so
great. Alhamdulillah.
one of the things some traders look for, especially momentum traders, they look for volatility. So volatility of a stock is the fluctuation of a price in any given time frame. The most volatile stocks may demonstrate price fluctuations of up to several 100% during the day. And so this is important for some people, right? Like if you're going to day trade a stock, and if you look historically, that stock just does not move that much, maybe 5, 10, 20 cents, then it's probably not going to be a good stock to day trade. And, you know, they have indicators that help us identify stocks that have good fluctuation. One of the indicators is called ATR. I don't know if you use that, Malik, with your trading. Do you use ATR?
No, I
No.
don't. But I kind of like I use my volatility. I base it off of the price action. How it really moves. How if I'm familiar with the stock, right, and I'm watching it, and only moves up 50 cents, down 20 cents, and now another day I see it moving up $2, down $1, or moving up $5, down $2. That's kind of how I see with the volume and the volatility. That's kind of where I aim.
Yeah,
But
so
like,
exactly what Brother Malik is describing, that's what the ATR indicator actually looks for, right? So the ATR indicator, the formula, it takes the current high minus the previous low, then it takes the previous low minus the previous close, then it takes the current high minus the current low, and I know that sounds kind of confusing, but basically at the end, what you need to do if when you read this, it tells you how much movement on average that stock trades, right? So if let's say this stock here, whatever this stock is, on average, it moves down and up about $1, right? So assuming the stock moves $1 a day and you jump in, the way some people use the ATR, let's say you jump in and you're up 40 cents, right? Then you can assume, not just with the ATR, but maybe with resistance, maybe with Fibonacci retracement, maybe with a moving average, you can assume that you have about, give or take, 60 cents of more profit to take, or your stop out. You know, you want to, maybe it moves up 30 cents. It's about to hit resistance. On average, it moves $1. It's already moved 70 cents. Then you may want to consider getting out of that trade or taking some of your position off, right? So if you got into a trade with, let's say, 3,000 shares, it pops up 40 cents, and then it's kind of like consolidating. It forms a bull flag or something. And then it pops up another 20 cents and it's up 60, 70 cents. And you know, on average, according to the ATR, that this stock only moves around $1 a day, and it's coming close to some sort of resistance, some sort of moving average. Then maybe you want to take some of your position off, right? Because you know that that overhead is going to come. It doesn't, on average, it doesn't move more than $1. And then there's resistance. Maybe take some time, take some off, so you can have some room. If it does drop, at least you're still in the green, right? That's just one strategy, maybe. What do you think,
Exactly.
Brother Malik?
Yeah. So like, let's say you entered a position and you expect a full dollar move, right? And then your stop loss would be, say, 10 cents below. So you're making a 10-to-1 ratio. So right now, when we're 70 cents into the dollar move, your risk to reward switches. Now you're risking the 70-cent profit you made for a 30% profit overhead, right? That's above you. So now your risk to reward changed, and now it's not as good looking. Your risk to reward was 10-to-1, and now the stock is, let's say, chopping around 70 cents. For you to stay in the position to catch that extra 30 cents, other than just taking out your position and pocketing your profits, because I like to say green is green, a lot of people take the position up 70 cents, and instead of catching that 30 cents, stock ends up moving down 60 cents. So now they're in a smaller profit, right? So that's why I like to say, if you are in a position like that, to keep your risk managed for sure.
Absolutely. And then they talk about shorting. If you're someone that short stock, you know, maybe you can use that to your advantage, right? Like, let's say it's coming to that resistance and you know it doesn't usually move more than $1. Some people use that information and short it when it gets to that area that it usually doesn't pass. I'm not the biggest shorter in the world, but that's you know, possibly one strategy, you know, if you're considering shorting a stock. So volatility is important for a day trader. If the stock just doesn't move on average, if it's boring to look at, then more than likely other day traders aren't going to look at it. So it's not going to be a good day trade. And I just want to emphasize one thing. We're talking about day trading. We're talking about swing trading. This does not apply to investing. Because on my channel, I do due diligence on certain stocks, and I go deeper and I talk about long-term investing. Volatility really doesn't make a big difference for long-term investing. If you believe in a company and you want to hold it for the next 5-10 years, some of Warren Buffett's stocks like Coca-Cola and those type of stocks, they don't move much. They don't have major volatility, but it's steady growth and dividend every year. So one thing that you're going to hear a lot, and we'll probably touch on this more during psychology of trading, is FOMO, right? The FOMO effect. Nar, have you heard FOMO before in your
Oh,
career?
of course, I feel it. I mean, it's an emotion, right? FOMO
Yeah.
is just an emotion we get when we see these people all posting thousands of dollars in profits. Meanwhile, I couldn't find anything in the market today. I'm gonna have that FOMO. I'm gonna have the fear of missing out, and now I want to go and jump in a trade that probably doesn't make sense, but I'm emotionally entering because I want to make money, right? And I'm
Yeah,
missing.
absolutely. So it affects, FOMO affects, the fear of missing out affects every, I mean, I can't say 100% every day trader, but I'm pretty sure almost everybody. Everybody, to the most experienced to the least experienced, they always have some sort of FOMO effect. It's just you have to know how to overcome it. I made a video here and I talk about the 5 things I wish I knew before I started day trading, and I'll get into just my personal the way that I overcame kind of FOMO. So for me, FOMO is just like Nar explained it, right? You see other people making money and you get into a trade that more than likely you would have not gotten into because you don't want to be the only one missing out. One of the biggest issues I had, right? Well, when I day traded, my first 2 to 4 years, I pretty much documented all my trades, put them in an Excel sheet, and look for patterns, right? And I found, for example, for me personally on Friday, I'm only successful 20 to 30% of the time. So I usually don't day trade on Friday. Then another thing that I found about myself, if I have a big green day, right? If I make in one day anywhere from 1, 2, 3, 4, 5,000, which is a decent, really good green day, then statistically, what I found that the next day I usually have a red day, a large red day. And I found that for some reason, when I have a big green day, when I go in to trade the next day, I have this mentality that if I made 2,000 the day before, that I'm going into that day with a $2,000 credit, so I can trade a little bit more buck wild, like a cowboy, instead
Uh-huh.
of instead of sticking to my plan. So what I started doing for myself, I said, okay, if I have a green day, the next day I'm gonna go in 75% smaller position size than I usually do, just to make sure that I'm trading correctly and I'm being precise. So like if I usually get in with 3,000 shares, the next day I will probably test the waters with like 400 or 500 shares, and just to make sure that I'm not being irresponsible and I'm jumping into a trade that is usually a trade that I would get into. So that's one of the things that I found out for myself, how I overcame FOMO. Hey, Chris, what's going on, man? How I overcame FOMO. Um, yeah, you can ask a question anytime, Hamad. It's no problem. You feel free to ask questions. We'll answer them. So yeah, that's my plan when I get in with a day trade. And again, this only applies to day trade and swing trading. We're not talking about investing. Investing, you can just put your money in an ETF and just put it every month and not worry about it for the next 10, 20, 30 years. You don't even have to look at a chart. This is specifically day trading. So anything you want to add of for you, Nar, how you, if you have FOMO, how you overcame it, and some big issues that you had day trading that you had to overcome and you learned to overcome through experience.
Well, yeah, I'll be honest, I learned, how to avoid FOMO, but I learned it the hard way where I'd chase a play that I seen already ran, like it's sometimes chasing those plays, especially when I was like in the beginning, when I first started trading, I would take these trades after they ran up. And then I started realizing like it's not the best move because most of them start to reverse on you. That's what market
Yeah,
makers do. They want to
yeah,
make it look good, make it look volatile enough. You take an entry, especially in Roku when it was like a really, really high stock, like around 400, 350 to 450. That stock was so volatile, and I would literally get caught in it a lot, right? Until I realized I gotta stop having that FOMO because I see the stock open up, shoots $10 at market open, and I'm like, oh, let me get a piece of that. And then 2 minutes later, it dumps that same $10 it just ran up, right?
yeah. That
Especially
that
stock
that.
specific.
Not to interrupt you, I'm sorry, but that was such a good point. I didn't even think about that. That was like also the same mistake that he made. I used to make the same mistake. Like you see a stock running up. If you see a stock running up, more than likely by the time you see it, usually you're too late, and you should wait for some sort of pattern to form or something before you jump in. But
Exactly.
but go ahead, brother Malik. That was
No,
a
yeah,
great point.
exactly. Right. So what you would want to do is if you see a stock running up, don't be so quick to execute onto entering, right? You want to see a pullback. You want to see some people selling off, and then you want to see buyers jump back in again, right?
Yeah,
So what I like to see is a stock moving up, volume is above average. And as the stock starts to move down, the volume is very, very low. And then the buyers start to come in and you start to see the volume come back in again. So it's kind of like a little pattern that I have going on. Sorry about that.
no problem. Yeah, that takes us to kind of like the next. That's perfectly takes us to the next slide. Do you brothers have an idea about permissibility of shorting stocks? Hello, haram. Well, there's some controversy. Some people say most people say it's haram to short. Some people say that it's okay if you're taking your put to kind of like hedge your position. Um, I some of the brothers that I know say it's okay because they use the example as like if you borrow sugar from your neighbor, right? You borrow like let's say 1 kilo of sugar from your neighbor with the promise of returning that sugar in a couple of weeks. It's a fungible item, right? So I mean it's a non-fungible item. So you borrow it, and then let's say you sell that sugar to someone else for $10, and you buy another kilo of sugar for $7, then you give that kilo of sugar back to your neighbor. So I've heard this argument, but it's kind of like the I think the majority of people say it's not permissible, but there's still some that say it's permissible, and that's kind of what I got with that. So capitalizing with a plan, and this is exactly what Brother Malik was talking about. So you see like a major run up, most people are going to be emotional and jump on the run up. And I have an example of just yesterday. There was a new IPO, or 2 days ago there was a new IPO, right? Look at this stock. No problem, Brother Ahmed. Look at this stock. It just came out IPO on February 14th, and then the next day, or February 17th, it went from $10 all the way to $106, right? So I want to show you something right here. And this is kind of like perfectly. Let's say this comes up in your scanner, right? And you see it like right here, right? And you say, "Oh my God, I want to jump in. I want to jump in." And then you see it go higher. "I want to jump in. I want to jump in." And then you see it go higher. "I want to jump in. I want to jump in." You have to avoid this, because this right here, this stock that went from $13 to $106, you have to understand that this is an anomaly, right? This does not happen every day. This rarely happens. Don't think if you catch this that tomorrow, if I jump in here, I'm still going to make money. No, you have to, when you jump into a stock, when you jump into day trade to a stock, you have to use statistics and probability in your favor, right? So the likelihood of a stock, let's say tomorrow we all jump into the stock, assuming that it's going to make this move again, it's probably less than 5%, right? These type of this type of volatility and this type of movement is very rare. Maybe 5 to 10 times a year you'll have a something that'll skyrocket 100 points in one day, right? And right now, how often you see something like this skyrocket 100 points in one day?
Not often at all, my brother. This
Not
is what you
often
were
at
talking
all.
about the other day, right?
Yeah,
I
this is the one I was showing you. So, but let's say you wanted to jump into this one with a plan. Hey, Penny Slayer, what's going on, man?
Hey, how's it going?
Good, good, good. Thanks for joining us.
Absolutely.
So I messed up on the dates. I told everybody the CPA was this week, and I just looked at the calendar, and it's actually the 26th. So that's my fault, man. So let's say you see this, right? Brother Malik was saying, okay, if you're gonna jump into this with a plan, right? So here you can see a perfect bull flag pattern, right? So let's say you wanted to jump into this. If you have discipline, you miss this uptrend. It's okay. You know why you miss it? Because the likelihood of it happening tomorrow and the next day and the next day, it's very unlikely that you're going to get this continuation like this. Very unlikely. I mean, why would you want to jump into a trade that probably less than 3% chance is going to make this move from $11 to $60, right? Not likely. But if you do see any movement, whether this is a movement of 50 cents or $1, you want to see some sort of pattern that you recognize and something that's safe, right? So if we take this, for example, we'll do this.
Also, if you could draw the support line from the bottom of the open and drag it all the way to the top.
Here we go.
It's a support trend. It's an uptrend line.
Okay.
So now you'll kind of be seeing the squeeze that's really
that?
happening. A lower. And drag it all the way to the right, all the way to that one red candle. Yeah, like that. Yeah. Up. Yeah, that's fine.
Okay.
You see? Now you guys see the squeeze that's happening?
Yeah, look right here, right? So if you wanted to jump in this trade, for example, right? This has just happened yesterday. And these guys, you guys didn't trade this stock, right?
What'd you say,
Penny
brother?
Slayer. Did you guys?
Yeah, listen, I didn't catch that when I caught the next one, the CPTN.
CPTN. Okay, and we'll talk about that in a minute. But let's say this move, this right here from 11 to 56. This pattern could be applied to any stock. It doesn't have to move 40 points. It can move, like, let's say from $3 to $3.80, right? Let's say you see a stock, it's moving up, moving up, moving up. Then it has its first red candle and it drops down low here. Then another red candle, it drops here, here. I would want to get in the first green candle that's larger than the last red candle, right? That would be a good entry point. So this candle here, it's got more volume, right? This is selling. This is more buying. So it's got more volume. Then this candle is kind of larger than this one. But so if I jump in here, I can say, okay, if it drops below the low of this red candle, which is 34.44, that's my stop loss, right? And my profit target, I would want to see more volume come in at the top of this. For me personally, for a bull flag pattern, at the top of the bull flag, I want to already start taking some profit, because usually when it breaks the top of this, it moves up a little bit more, but not much more. And then it usually has another pullback. So I want to take some profit if it breaks the pattern here. But you see here, so you see the red candle, you miss this movement up, you see a deep pullback here. You don't want to jump in here because the next candle can drop even lower, right? But you see here, you see some selling, you see some selling. It's holding this support area. You see some selling. Then you see a large amount of volume come in. You see a bigger green candle than the last one. This one, you see it's higher than this one, right? I would jump in here with the stop loss of this area down here, the low of these red candles. And then you see the movement. And then right here, I would probably take profit, right? I would take some profit, and maybe 50 to 70%. That's just me. Because I know usually after it breaks the flag, it squeezes up a little bit more, but then it has like another pullback. And then you can, if you're already in the green and you've already taken profit, then you can hold, and you can go through these little volatility areas because you're already in the green. You guys have anything to add to that?
Got it right on the nose, brother. But what I was basically saying, yeah, like you see the rise up, you see the pullback, and then you see that next candle is an insane amount of volume that pushed it out of the bull flag that you had there.
Yeah.
So once you see that, you're like, okay, yeah, this could probably be a good trade. And then you want to do your due diligence, obviously, about other things and execute.
Yeah. So usually when you have a what do they call the stocks that have like this crazy movement in one day? Skyrocket, or no, not skyrocket. What is it?
Pump and dump?
Not a pump and dump. I forgot, man. Like
he said pump and dump.
no, but so anytime you have some of these stocks, right, that move like crazy, like 50.
Parabolic.
So this is parabolic stock. Yeah. Anytime you have like a parabolic stock like this, that goes from a parabolic. This is a parabolic stock. It was trading at $13, went to $106 in one day. That is a parabolic stock, right? Anytime you have a parabolic stock, it does a couple of things for day trading. It has sympathy plays. What sympathy plays are another stock, usually other stocks that are maybe close in the same sector, or maybe another IPO or something that is similar to the parabolic stock, has some sympathy, and the people that miss this out, they jump into other stock, and that other stock has movement too. And it also brings volatility back to day trading, usually for a couple of weeks, right? Usually this momentum, it brings like a nice sentiment to day trading for the next 3 or 4 days. So that's your time to get a little bit more aggressive. And I know our brother here, Penny Slayer, he didn't trade this one, but he traded probably a sympathy play that also had major movement because of this one. And you said it was what? See what?
It was CPTN.
CPTN. All right. Okay, here we go. Look at that.
Wow.
Yeah. So look at this. This is another IPO, right? Like, just like I said, this is not scripted. I didn't know that it was an IPO, but we saw that the other play that we just showed you, ISPO, was an IPO that made major movement. This is another. I told you, usually there'll be sympathy. It'll be either the similar, like an IPO, or something like similar sector. So let's say the other stock was in blockchain sector, then the other blockchain stocks will more than likely have a sympathy play. But this is another IPO that probably would have not, this movement probably would have not happened if the ISPO stock didn't move crazy. But another IPO went from 10 to $78. Major chance for movement here, for profit here. And Penny Slayer slayed this one. No pun intended.
My
But
man.
but yeah.
I
So
mean,
this is
listen, on this one, it was just one of those, okay, I see a lot of volume coming into the stock, and I made an entry around the $20 range. I believe it was, I think it was 23.78 or something like that. And it just kept rising. I mean, there was some halts along the way, but nonetheless, it was a very good stock, treated me very well. And of
look at
course,
this.
I didn't sell at the top. I think it got close to closing time, and it was around $50. And I go, yep, it's time to take my profits.
Absolutely, man. That's the way to do it. This doesn't happen that often, right? So you have to take advantage because this can sustain you for like a few months of slow period during day trading. Day trading has its seasons, right? Sometimes it's slow, sometimes it's busy. So these type of trades sustain you during the slow season. So
Yeah,
this is
well,
great.
what I've noticed about these parabolic plays is
Uh-huh.
it happens about a handful of times each year. So
That's yeah.
you
That's
can
great.
catch.
That's exactly what I was just saying, and it's funny. Before you jumped on, I
Yep,
said these parabolics a few times a year you get them.
yep.
Yeah.
Last year was crazy. I mean, nothing like 10 to 100, but there were a lot of big moves.
Well,
I remember
GLSI was
I caught
one. So
naked.
yeah,
Naked.
GLSI was one of those stocks that went from $4 to 150.
Whew.
Which
Yeah,
one?
it was crazy.
What stock you said?
Yeah, it was GLSI. So you have to go back to 2021. Yeah, there's that big green. Yeah, that right there, that move way in the beginning. Was it 2020 or is it? Yeah, it was. So okay, so it was late 2020. My bad.
Yeah. So $4
Probably
all
2021.
the way to 158 in one day.
Massive move.
Yeah. So the thing too, when you know this has a potential to move, if let's say tomorrow this starts getting some volatility, a lot of day traders are going to remember the move it made in its past, right? So that's we call that former runners. So former runners are very important for day traders. When they look into a stock like this, let's say GLSI tomorrow gets a news announcement and it starts, volume starts coming in, it starts breaking moving averages, it's forming a pattern. There's probably gonna be increased volatility and volume that day because people remember this move here. They remember that it went from 32 to 68. People remember this move here. It went from 4 to 158. So if it does get some hype, more than likely it'll get some volume. But if you look at the patterns and if you look at usually stocks that have these big moves, you see here it never replicates it, right? I mean, more than likely, when it has like these big moves like this, usually the next one is never going to get as high as the original big move. That it just doesn't happen as often, but it still gives you major spikes that are uncommon, but have room for making money. Like here, this is a 38 to 48, 39 to 48. So this is you still get opportunity to make money.
So
So
just for all of you watching, this is a breast cancer play. So this was a company geared around their phase 3 trials against breast cancer. And those trials are actually due this year. So keep GLSI on the radar. There's potential for this to keep going from
yeah.
$18. So put it on your watch list.
Absolutely. So we have a question here. What intervals do you watch? 1 minute, 5 minute, 10 minute? What time frames should I use based on a goal day trading 5 minutes? So for me, if I'm day trading, first, if I get a stock like this, or let's say another stock here, let me see. So let's say I'm interested in Riot. So my process, and I'm gonna let everybody else share their process too. Hey, no problem. Thanks for showing up. Um, So my process for me, if I get a stock Riot, right, it's on my watch list. Let's just say it's on my watch list. I'll start off with the month and start building some trend lines, right? That's kind of my process here. So I'm not gonna do all the lines, the support and resistance lines, but I'll just give you an idea here, right? I'll just start building some areas of that I would be interested in. I would do a lot more. And I also I color code them. So like for the month, I'll do like a maroon color. Hey, Ben, what's going on? I'll do like a maroon color so I can know it's the month resistance. Then I'll go to the week and I'll build some support and resistance lines. And then I'll go to the day and I'll build some support and resistance lines, right? And then if I'm day trading it, these support and resistance lines would pop up. There would be a lot more, but I'm just trying to do this as quick as possible. So let's just say I'll do a few day supports here. So here it bounced a few times. Right here, it's interesting. All right. So I'm not going to do all of them, but now I built some support and resistance lines. Now, if I'm day trading it, I'll have like two charts. I'll have the 1 minute chart and the 5 minute chart. Let's do the 5. So this is a 5 minute chart, right? And there would be a lot more support and resistance areas. But now I'll be looking at this stock. I know where some support is. I know there's support here. I know there's resistance here. And then I'm just going to be watching the stock at a 5 minute and a 1 minute and kind of like build my entry around that. So that's kind of how I look at it. If I'm swing trading, I'm going to just look at the daily and just focus on the daily. But I'm also going to be looking at the support and resistance with the monthly and the weekly and the yearly supports and resistance. And then I'll let Malik and Penny Slayer kind of talk about what timeframes they use.
So yeah, I'll take first stab at this. So I'm a scalper, right? So I day trade. I always get into a position on a stock knowing that it's going to be a day trade. Never, I've always let the stock allow me to potentially swing it. So when I look at resistance lines and support lines, all I'm really doing is looking at past highs and looking at their peaks and how long I want to be able to potentially trade this stock, right? So when I go and I take a look at old highs, I may look at the 1 minute candle to see if, it's an intraday high. And then if we break intraday high, that's confirmation on intraday high. That means there's going to be more volume into the stock today. Then my next step is, okay, where's our resistance levels at? So I'll switch maybe to the 5, the 10, the 30 minute. I'll look at all of those and look at where my peaks are. And when my peaks are, those are my resistance levels. And so there are little gaps to fill in between those levels that I'll go and take a look at just to make sure that I'm not missing any peaks or any selling pressure, right? Because, when you look at candlesticks, you're able to tell if there's selling pressure in those candlesticks. So by, the candle wick at the top. So what I'm looking for is candle wicks when I'm looking at past resistance levels and the tops. So that's sort of where I go to find my resistance levels. And I go, okay, this is going to run from $4 to $4.50 and have a little bit of trouble at $4.50. But if we break $4.50, then we've got a clear run to $5.75 or whatever the gap fill may be. But that's sort of the way I look at stocks.
Yeah. What about you, Malik?
Malik dropped off.
Oh, Malik dropped off. Okay. Okay, got it. He dropped off for a second. All right, so that's it. I mean, that's pretty much most people like he said, like they'll find these peaks here, these drops here. This might be an area where it could support. This area might be resistance. So that's you heard his time frame. And I shared my time frame. So again, we were talking about this is a good example here. This stock went from $2, spiked up here to about 290, right? Now the temptation is to jump in here while it's moving up. And that's a lot of traders do that. And then they kind of get flushed out and they sell once it drops a little bit and it doesn't continue to move up. So you have to overcome that temptation to do that and kind of like look for a pattern that you can rely on. Look for something that looks familiar. So again, here we talked about the bull flag, right? So it spiked up here. Then you got a couple red flags. You got a couple pullbacks and you got some selling going on here, right? So I would look for the break of the previous candle, right? So this candle here broke the high of this candle, right? So this candle, this is its high. This candle, this is its high. This candle closed lower than this high, right? So I would have not entered here. This candle closed lower than this candle. This candle here broke the high of the previous candle, and it has a lot of volume. So I'll see those two things. I'll see the break of the previous candle. I see a bull flag pattern, and I see volume coming in. So I'm going to jump in right here in this candle around 278 because it's the break of this one, knowing that my exit, if it doesn't work out and it falls below the low of this candle, that's where I have my exit strategy at. So this is good for a beginner to practice, especially with paper trading, especially with maybe very, very little money. Somebody asked about how much money should I start day trading with. I would say if you're new, start off, with a trade like this, maybe just 50 shares, something really small where if you lose, $10, $20, it's not going to hurt you, but at least you're practicing, you're gaining experience.
Hey,
right?
Juan, can I add a
Yes.
little something here?
Please do.
Yeah, so let's just say, and I can't really see where the bottom of that green wick is, but yeah, you're absolutely right. Setting the bottom of that wick as your stop loss is key, but just a little extra for you all, right? I think if you start to get into the mind of a short, right, because there's two sides of a trade. You have the green, you have the bull, and then you have the bear, right? And if you put yourself in the mind of a bear trader, also when you're making your day trade, it's going to help you out a little bit. So for instance, let's just call the bottom of this green line 245 because I see it there on the right.
Yeah.
If your line is actually 245, I would actually go down a few numbers from that, right? Because bears like to attack 245. In my opinion, bears like to attack numbers like fives, zeros, and even numbers. So what I like to do is I like to set my stop loss to odd numbers, a couple of down, right? So if, for instance, 245 was the bottom here, I would be setting my stop loss at like a 241.
There you go.
Letting it sit there.
Yeah, and that 241 here too, it's also, there's a moving average too. So, if it breaks below this and then it starts to test this moving average and maybe break that, that's a good exit strategy. So that's a great point. Sometimes, when you want to do the bottom, give yourself a little wiggle room. And what he's talking about is there's going to be natural resistance and support in like even numbers for some reason, right? Like, for example, if there's a penny stock that's trading below $1, like at 90 cents, 80 cents, you can know that there's going to be a lot of resistance at $1, right? And then for some reason, $3 is just a heavy resistance area. And there's just some of these even numbers that are natural resistance and support. So you get in here with the, if it just flushes out, your exit is like Penny Slayer said, around 241 would give you a little bit more wiggle room, and you take your loss. It's a small loss, right? But your profit target, you start the break of this. I would take some profit here and then see how much it moves after that. And is anything else, Penny Slayer?
Hey, my fault. I had to run to the bathroom real quick.
Hey, now do you think, man?
Yeah, no, I think that's beautiful stuff here, man. I think this is important information for people really starting to learn how to read candle charts.
Absolutely. And we have actually a couple modules specific on candles and different things in the future.
I just want to add though, if you go back to that, like usually what you want to see is the sellers, or where the sellers are. You want to see them become buyers. So as you can see in that red candle where the yellow line starts, the first red candle on the open of the day, right on the top there was a lot of sellers who were able to push the stock back down below that candle's open point, right? So you could see that there are sellers at that $3 mark. What you want is to wait for the stock to go above the $3 mark, retest the $3 mark, and see that there are buyers sitting there. So as you can see, there are buyers on the last candle that is shown on this. Not the volume though, the specific candle itself. You could see that it held the $3 mark that was rejected. You could see that it held the $3 mark where it was rejected in the beginning of the day. So like, let's imagine these are 1 minute candles. On the third candle where it was strongly rejected is where we're using as support now for the last candle that was shown on the chart.
Oh, this one here, right?
That's good stuff. Hey,
Yeah,
Juan, I
absolutely.
actually sent you a drawing what Malik is talking about right now to your Discord DM. I sent a little chart there that you may want to try and view a little later.
Okay, where is it at?
It's in your
Oh,
Discord DM.
okay, here we go.
Yeah, so
So
I actually
go
drew
ahead.
it on PowerPoint, Malik.
Go ahead if you want to. This is yours. Go ahead, explain it.
Yeah, so this is a little bit about what Malik is talking about here. Is this volume spike is usually what you'll see, and it creates a new high of the day. This should be your radar, right? This is what puts a stock or a potential play on your radar. And then essentially what you'll have here is a bit of a pullback, and your pullback can last anywhere from 1 minute to 3 hours, right? But what you're really looking for is the bottom of consolidation, which is the area that it takes for it to confirm again on the other side and build another leg up. You're looking at the bottom of that for a stop loss, and then once you hit confirmation, that's when you start to, or for me, that's when I'm making my entry. Right, that's just the way I play.
Okay,
Some
so
play,
I'm sorry. So confirmation for you would be it breaks this high of day.
right, with a full candle. Right.
Okay.
Yep. So
Perfect.
I
Oh,
don't buy on candle wicks. I buy on full green candles past high of days, and
okay.
essentially that's what we were looking at in the last chart. So and again, I'm a scalper, right? So I'm in these plays for the next leg up, and then I'm out, and then I'm waiting for the next pullback.
Yeah,
So
and then and oh, I'm sorry. Go ahead. I thought you were
yeah.
finished. Go
So
ahead.
and then, but to add to what Malik was talking about here, you just start this chart all over again, right? You never let your past lows get past your last high of day, right? So it's just continuously building this leg up, and then it leg ups, and then it consolidates, and it leg ups, and then it consolidates, almost like a staircase, right? And so that's usually what I'm looking for, Malik. If that, just to add to
Yeah,
what you were saying there.
yeah. So what they're saying is they want to see somewhere which was past resistance, like this area here, right? Let's say I draw. Let's say this area was hit several times, right? In the past, it hit this area, then it dropped. Hit this area, then it dropped. Hit it here again, dropped. Then it passed it. Finally passed it. Now, if this area becomes support, that's important to us, right? So you see here, it spiked up. Now it tested the same area in this candle here, but it didn't go below it. So now this resistance became support, and that's what we want to see. We want to see resistance becomes support, and that now becomes this new support, and then that restarts this here. Is that what you guys are saying?
Exactly. So it's like stairs, right?
Yeah.
One part of the stair could be the top, but if you go on the next stair, that part is the bottom.
Yeah.
And you
So
want to
so
make sure that it's a floor and a ceiling type of pattern. And when you notice it become flatten out and lose momentum, that's kind of where you exit the trade.
yeah, so look at here. It hit this wall here, then it bounced off of this. It dropped below it a little bit, but then it bounced off this previous resistance, but it's still support. So now with the stairs that they're talking about, eventually they would like to see this stock here, Apple, break this area here and then restart this again. This area now becomes support and it just goes higher and higher.
Yeah, exactly. And it
Okay,
could be on
so
any time frame. It could be on
yeah.
the 1 hour, 1 day, 1 minute, right? It just depends what kind of trader you are and how you could catch it. And it's going to be obviously more, reliant when it's on a bigger time frame than what's on a smaller time frame, because smaller time frame really depends on how the day's moving that specific day. Um, so yeah, that's just my 2 cents.
Yeah, so Chris asked the question, would you guys day trade options or only stocks? I do both, and I also swing trade stocks and options. And you see here, for example, I did a video on credit spread opportunity. And the reason, and this is profitable right now. If you look at from the time that I made this video till now, it's profitable. And the reason I chose a spread for because of the volatility and the uncertainty that's in the market right now. I wanted to kind of like hedge my own position. So even if it dropped and Netflix came out with some crazy news, I would be hedged because of the spread that I chose. So that's a swing trade that I took, which was in credit spread form, and I used options to kind of protect myself, just in case Powell comes out and has a stroke and starts saying a bunch of stuff and the market crashes. I protected myself with this spread. But I've day traded options before, and I've day traded stocks. And these guys, I'm not sure. You guys just trade stocks, options?
Yeah, I trade stocks sorry, I'm trade options mostly. If I'm trading stocks, it's because I'm probably looking to invest, for the longer term, or anywhere between 6 to 9 months at least. Or if it's like a stock that I know has growth, I'm not sure exactly when it's gonna go, but I know it would and it has potential, so that's probably what I would do.
Yeah,
And you
I'm
pay
sort of the
and
same way. I'll trade stocks to day trade with, and then I'll use options as a leverage against higher price stocks, right? So I'm not going to go out and buy 100 shares of Nvidia to break the line just because I'm a master of risk, right? So I'll use options to lessen my risk and my exposure to the stock, and that's the way I use options.
yeah.
Exactly.
So
I
for
know.
people that
Go ahead. Go
So
ahead, go ahead.
for people that don't know about options, we'll just and we're gonna have another an introduction on it. But like, let's say you wanted to buy 100 shares of Apple, right? And Apple's trading at $166, right? So if you wanted to buy 100 shares of $166 stock, that's who got the math real quick? That's that's a good amount of money, right? Let's see, get calculator here. All right. So we have, let's say, 100 times 166. So you would risk $16,000, which, okay, that's not terrible. Let's do another example. Tesla is trading at, let's say, 900.
Yeah, I mean, I was gonna
Okay.
say I know someone who trades Amazon, but he doesn't do options. He does shares. So he dumps at 100,000 into an Amazon. He buys 30 shares just to make like $3,000. And it's just like, why would you dump 100,000 to make 3,000 when you could have dumped 3,000 into an option and made 3,000? You
Yeah,
know?
exactly. So let's say you want to buy Tesla. It's trading at 900. You would have to put up 90,000 of your capital to get just buy 100 shares. With an option, you can probably buy the contract to buy 100 shares. And we're not talking about naked contracts. So you would have the capital that if you got exercise to buy the 100 shares. But let's just say you buy the contract to buy calls at, let's say, $1,000 or whatever, and that contract might cost you $1,000, right? Or $1,500, and you can still potentially make the same profit you would have made if you would have outright bought 100 shares at 90,000 with just that one contract. Okay, so for so these are some things for, especially for scalpers, like Penny Slayer. These are some things you want to see if you're going to scalp, if you're going to
Hey,
day
I'm a
trade,
scalper too.
huh? Oh, okay. And
Hey,
Penny
I'm a scalper
and
too.
Malik, do you guys scalp options? That's a good question. I've scalped
Yes.
options before. Yes, I have.
Yeah, what I
So
normally do is like I would dump 10K in a position in options, right? I'd buy 100 shares. Like I'm actually gonna send you an example on what
okay,
I did yesterday, right? I dumped about. I'm just gonna read it to you here.
you can send it to me on my on the DM on the Discord, and I'll post it up here so we can see it.
Perfect. Yeah. Let me send it right now. Option chat here. Trying to find out how I could do that. But if you want to go ahead, and I'll just do it
Okay.
when.
So some of the things that you want to see if you're going to day trade, you want to see, you want to make sure that stock has volatility, right? Then some people want to see catalysts, right? This is not for everybody, but this is in general, right? This helps. This helps your day trade, right? When you're going to day trade and you're going to swing trade, to me, the way I look at it, I say, okay, I'm building a thesis. I'm building a theory. I'm trying to find the best way, the best opportunity. I'm trying to find the best opportunity and put everything in my favor, right? So I want to make sure that this stock has some volatility if I'm going to day trade it. Catalyst is going to help, like if a stock came out with some news. So the reason that's going to help because it's going to bring attention, right? And if you're going to day trade, you need volume, you need volatility, you need people to come in and trade that stock to find an opportunity. You want to see that it has some daily range. Like if you look at stock and historically it only moves 20 cents on average, well, I'm not going to jump in and day trade that stock because I'm giving myself such a small chance to make money that day. I'm going to look at the supply, right? If it's a very low float stock, then I may approach it differently than how I would approach a medium float stock. And what float is basically how many shares they're circulating. So there's float and then there's shares outstanding. Float is what's available to the public. Shares outstanding, it includes float, but it also includes like shares that owners hold or certain workers hold, like compensated shares. But for us, float is like if you see a company, and we gave an example last week that has a very low float, it's going to make crazy movement. So for me, if I see something and I'm interested in day trading it and it has really, really low float, I may take profit a little bit earlier because I know as fast as it can move up, it can dump easily too, as opposed to something that has higher float. Then you're going to also want to look at the band, technical breakouts, right? Like we talk about the bull flag patterns, maybe breaking an area of support, or breaking an area of resistance. I mean, or maybe like a VWAP bounce. You want to see some sort of pattern, something. So to me, you want to see all these things along with volume, along with good price action, along with a strong candle, along maybe with confirmation with other indicators like an uptrend on the stochastic or whatever. You want to see all that thing in that one trade before you jump in it, you know. And then go ahead, Malik. I got your video. I mean your screenshot here.
Yes. So on that specific instance, right, what we did is, on voice chat, we were like, okay, we'll take the 435 puts on SPY. We entered 200 of them, right? And it costed around $380 per. So that's what we got filled for on 200 contracts, right? So once we've seen one really big move, right, what we do is we size out half of our position just to secure profits. I don't care if I know it's going to move down another 10, whatever it is. I always like to secure my position because now my risk to reward ratio changed. It's a lot closer to my take profit. So what I want to do is at least seal half my position. And then the other half, I'll see what happens, right? So this was a great instance where my first sale was actually better than my second sale, right? My first close was 405 per, and I bought it for 380. So I sealed 100 of them for a $25 profit. Right now, the next one, I noticed the stock started to uptrend in reverse. So what I did was I sealed the other 100 right there. So instead of me holding all 200 and closing for that 394, which is a $14 price, so now there's a $9 difference between both of my sells, we would say, right? Right, approximately, or $11. Sorry, 11, right?
Yeah.
394,
So
405. So that's about $1,100 difference in profit for me.
yeah. And how long did this trade take you?
This was approximately nothing more than like 5 minutes.
Okay, so just to show you the power of day trading, and you shared these numbers, so I'll just kind of do the math so people can see. So when he bought the 200, let's just say 100 shares, he bought 100 calls at the price of $3.80, right? So let's say that comes out to 380 per contract. So to get into this position, it cost him 38,000, right? His first batch that he sold for 40,000.
It was 200 of them. Sorry.
Yeah, but
Oh,
I'm just doing 100. Yeah, just doing 100 just to make it quick. So just to show in a couple minutes, the 38,000 that he spent to command 380 contracts, 380 actually 100 contracts at $3.80. He sold them for 40,000. So subtract this. 2,500 in a couple minutes. Just in a couple minutes in that trade, right? He jumped in. That's one. That's just half of the trade, and then the other one he made like 1,100, right, or something.
No, it was about 1400.
1400. So
And then there's another position as well.
so
This one
so
was right after.
yeah. So this right here, just to show you, this is a real, real statement from your broker that he jumped in this trade. And we got a shout out here to my boy Amit. If you don't know Amit, Amit's got a great YouTube channel, great information on stocks in general, but specifically too on Palantir. If you're a if you're bullish on Palantir, uh, he's got one of the best and most in-depth channel with regards to Palantir. Great guy, very intelligent. I support his channel. I love his channel. I watch his videos. So we got here, just to show you an example. This is one quick scalp that Brother Malik did, where he jumped in with 200 contracts. And this is in a matter of 5 minutes, he sold his 2 contracts. And this is the profit he made in 5 minutes, 3,900. This is not fake. This is real. If you're a day trader, you have your days like this. I mean, I've had my days where we made this much in a few minutes. But this is, realistic. This is, and then this is, when you start having too many of these days like this and you get into the 6 figures per year, that's why you need to ask the tax questions. And we'll have a tax accountant next week. We'll have a Snapback CPA next week to help us with our day trading tax questions. If it's better to day trade as an LLC, S Corp, or whatever. So that's just to show you one quick scalp that he did in 5 minutes. And that was the outcome. And that was using options. So anything, Penny Slayer, you want to add?
No, I think this is all great stuff. This is good.
Okay. So, we were talking about former runners, right? So I have an actual recorded trade where I traded, I don't remember what stock. I think it was Hertz or something. Or I think it was Kodak. And I have the video where I actually recorded. It was traded and I traded it live and I recorded, where I kind of jumped in quickly to that stock without much of the stuff that we talked about. We talked about, hey, don't just jump in a stock without a bull flag, without looking at these other things. I actually jumped in that stock. It was pre-market because it came out with a headline and I knew Kodak, and I think it was Kodak. I don't remember, but I have it recorded, and maybe in one of the other videos we'll show the recording of it. I got to look for it. But I actually recorded myself trading, and I have a news scanner, and I saw a headline came out for Kodak, and it was positive news about it. And I knew that Kodak was a former runner, meaning that every time this stock gets some sort of news headline, anytime it gets some sort of catalyst, that it runs up no matter what. It's just one of those stocks. It's a former runner and people are just waiting for news to come in. And I actually jumped in that stock without any plan. Actually, it was kind of like against what we just talked about. There was no bull flag. It was just the news just came out. I have a quick scanner. It's called Scans. It just popped up. So I knew I was really early with the news. And I didn't wait for no formation. I just jumped in because I know this stock is a former runner. I know that every time it gets the news, it did. And then from the time I jumped in with the news, it spiked up like $2 before I took profit, so that was just pure instinct. That was just pure kind of like, you can't really teach like just that type of experience and instinct where you just know this stock, how it moves, and in the past it's moved. But you can look at companies that are former runners that move in the past. Usually they run again if volume starts to come in, if there's some sort of catalyst. Do you guys agree with that, or you have any experience with that?
Yeah, I mean, it's always, with stocks, the only type of technical analysis you can do is going off the history of the stock. Really, like, there's no other way to tell, potential where there could be sellers, right? Because maybe at Kodak, there were sellers at $70. So now, next time Kodak goes near $70, there's people selling there as well, right? And there's like automatic sell levels. Like I actually have this thing in my course where like there's levels that, other than wholesale numbers, there's the history of the stock that you can use to tell how much money it can move potentially up or down, or where it could bounce off support. That's because of the history.
Absolutely. So just to recap, so build your criteria for a stock. Just know what kind of stocks you're comfortable with, what you like to trade. If you're in a scalper, just make sure there's volatility. Make sure you have some sort of technical analysis. Combining that with fundamental analysis, news, volatility, all those things make a stock stronger in your favor. And that's kind of what you want to do. You want to, like I said, build a thesis and make sure you have all these things checking off. Be like, okay, this stock looks good because it's bouncing off the support. It has a catalyst. It's moved in the past. It has room to run. It's above certain moving averages. The next resistance, there's good amount of space. So, what I mean that there's a good amount of space for profit, meaning if you want to make sure you're jumping in a stock where you have enough room to make 3 times your stop loss, right? So if you're risking 10 cents, just to make a quick example, you want to make sure that you have enough profit, that potential profit for 20 or 30 cents, right? You don't want to risk 10 cents for a profit of 10 cents or $1 for $1. You want to make sure that there's more profit room, right, than your stop loss room. And that's kind of my strategy. I don't know about Malik and Penny Slayer, if you want to add into that.
I definitely, risk to reward ratio is something you should always understand before you enter the trade, right? Establish the risk to reward ratio. Establish that I'm risking 1,000, I'm willing to lose 100, and I'm willing to come out the position 1,500, right? Now, if I'm up to 1,400, now I'm risking 500 on the lower side, right, up to 900 to 1,400, and then only just to make 100 on the upper side. So now your risk to reward changes. Your risk to reward changes constantly in the position. That's why I like to tell people to constantly keep up with their position. Does it make sense to still stay in? Would it make sense to just size out of the position just in case it was to come down? Just like the example I just showed Juan. Remember the 200, 100, 100? I sized because I didn't, my risk to reward changed. I was a lot closer to my take profit than my entry. So if I stay in the position, it could literally come back and retest my entry and even, break through for a confirmation for call. So I like to secure a lot of my position because risk to reward changes. So you also want to manage, always keep up with the management.
I do the same thing too when I'm managing a day trade. If it gets to a certain point, I like to take maybe half or more off the table so that I'm in the green. And now if it doesn't continue and it just flushes out and I get out, even let's say if I get out at the price that I got in, well, that other half that I sold at that profit target keeps me in the green for that trade. And that's kind of how I manage my thing. I don't know, Penny Slayer, you do the same thing?
That's all great stuff. And then Malik, man, awesome information there. I think it all just really generates around building a plan. And then once you build that plan, stick to it. Because if you have rules that you break, what are you making them for in the first place? You know what I mean? So make your rules, make your plan, and stick to your trading plan, and you'll be profitable. I think that you just have to figure out how to build those plans. And that's what we're showing you here today, is how to build those plans incrementally and then put those plans into place. It's going to help you for sure.
Yeah. Yes, sir. Okay. So just going to go over, this is going to be a brief module. There's a couple of types of accounts, right? We'll talk about if you're going to open up a day trading account, you're going to either get a cash account or a margin account. So what's a cash account? Let's see here. Hold on. So can I add a point? There are 5 outcomes on a trade: win small, lose small, break even, win big, lose big, 50-50 to make or lose money. If you make a calculated decision and set losses, you take away big losses, then your percentages are much better. Yeah, that's a great point. Absolutely. How do you guys trade? Do you guys go for like win small, lose small, or win big, lose big? Like kind of for me, I'll start off first. For me, and thank you for sharing that, Chris. It depends. Like if I have an A+ setup, right? What I call an A+ setup for myself, for me personally, an A+ setup is it's some sort of formation that I'm familiar with. I'm even more bullish if it's a stock that I trade often, right? Like I trade Tesla quite often when I day trade. I have a great relationship with Tesla. Me and Tesla go way back, and I've been day trading it. And like I think if I put, for me, and this is me personally, there's a few stocks that are Tesla and a couple other stocks that if I took all the trades on an Excel sheet, I think I'm anywhere from 80% but successful day trading Tesla. I'm just so familiar with its movements, and I'm comfortable with it. So maybe like if it's a stock that I'm comfortable with, familiar, then it's breaking out of a support area, a resistance area. It's breaking a trend. There's volume coming in. It's an uptick on the stochastic. I use the chandelier exit also, and it says buy. And there's just like multiple confirmations, and it's bounced off an area of support. Then I'm like, okay, all these things for me is an A plus plus. I'm gonna try to win big, but I'm gonna risk, like, let's say win big meaning I'm getting in like large portion of my account, and I'm risking also a large portion though. So like if I'm risking, if I'm trading in, let's say 30,000, I might be risking 3,000, for that position. So that's pretty big risk, but it's still it's compared to the potential reward, like it overcomes that risk. If it's a stock that I'm not super, like I'm not A plus plus comfortable with it, but I think it's still going to break a certain area, then I might jump in and I might take that win small, lose small kind of approach. And that's how I approach it for this kind of like statement here. And you guys, I don't know if Malik or Penny Slayer, anything from that? Is that how you approach?
Yeah, I mean, I use that same method. I mean, win small, big small is sort of my win small, lose small is sort of my go set, but I let the stock dictate where I go. So, for instance, if I'm in a position where I'll go, okay, I'm going to win small here, and then the stock jumps $3, right? If I'm trading a penny stock, for instance, then I'm more likely to sit back and reassess my charts after I see a pullback, right? So it really just depends on where I'm going and how I'm feeling about the trade. But more than likely, taking out my initial position first on a big spike like that, and then writing the rest of the shares for free, so my emotions are out of the trade.
Absolutely. So
I love free shares, man. I love free shares. Those are the best.
There you go. So we have here, okay, so you can when you open up your account, whether it's TD Ameritrade, Webull, or anyone, I guess. I mean, I don't know about Webull, but TD Ameritrade, like Lightspeed, you can get a cash account or a margin account. So a cash account, when you jump in, you can trade everything, but you can't short, number one, if you have a cash account. You could buy options, you could do everything else except shorting. And let's say you have $100,000 in your cash account and you buy $100,000 worth of Tesla on Monday, you have to wait for settlement. And so that means Tuesday you won't be able to trade, but Wednesday your account would be settled and you would have your $100,000 that you traded plus whatever profit or minus whatever loss you had from that Tesla trade if you bought and sold on Monday. So that's kind of like a cash account. I am a big advocate for a cash account, especially for new traders, because to me it's like if you're like a baby in day trading, meaning you're brand new and you're baby, and you're teaching a baby how to shoot a gun, I wouldn't give him like a rifle that's like an automatic M16 type of rifle. He's gonna, I'd rather give him one bullet at a time, until he learns how to shoot properly. And I mean, maybe not a baby is a good example, but a little kid or whatever. So, giving someone that's a brand new trader a margin account, that means they have unlimited amount of trading and they're brand new. I think it's a recipe for disaster. You don't want that temptation. If for example, you have a cash account and you're brand new and you're just learning, then more than likely you're going to wait for the best trade setup to use that trade. If you have a smaller cash account, you may only have one or two trades. If you have a little bit larger, you may have some more. So you're going to be more precise with your trades and be more careful, because if you trade on Monday, you're like, okay, I'm going to have these trades. I'm not going to be able to use this account till Wednesday. So let me make the best of it and let me pick the best thing. I strongly suggest you get a cash account. I don't know how you guys feel about that.
With options, what I like about cash accounts is it settles the next day. So if I traded with $1,000 worth of options today and I made $500, the next day I'll have $1,500 to play with. But I
Yeah,
think
but
it
you
depends.
see, but you still get limited, right? You can't trade the same day as opposed to like with if you would have been on a margin account, you the same example you just gave, you trade, you get that right away, and then you have more money to trade with.
I mean, it depends. If you have under 25,000, your round trips, you only have 3 round trips for 5 business days.
Well, yeah, we're assuming it's above the PDT rule. We went over the
Oh yeah,
PDT rule
above
last
the
time. Yeah.
PPT rule, I definitely would do the margin account over cash account, because cash account you still can only use the cash you have in the account at the end
Yeah.
of the day.
Yep.
But that's
I'll
for
support
me.
that.
Yeah, that's. I mean, for what would you recommend for a new trader though? You would recommend a new trader use a margin account, someone who's just learning, or would you recommend a
Me,
cash
no.
account?
Me, I would personally say cash account, because they're gonna get banned. I deal with so many new traders all the time, and I tell them, like, as much as I would love you to use Robinhood and focus on learning how to trade instead of focusing on learning how to use a new platform, because I know Webull and E-Trade are pretty complicated for new traders. So I guess learning on Robinhood is fine, but they have to they could fall into pattern day trading so easily. Where on a cash account, it's literally telling them you're restricted from making a trade.
Yeah, I agree with the cash account just because I feel like the newer trader is going to blow up their first cash account.
Yeah.
I think
So
that's usually happens to most new traders, right? And then they gain their ground again. They go, okay, let's give this another shot. And that's the people we love, right, Malik? I mean, those are the people that we go, okay, clap our hands together like that old guy in Karate Kid, right? We rub our hands together and we go, all right, what can we teach you? Because that's when I start to see like, okay, this guy has what it takes to take it on the chin and get back up, dust himself off, and get back at it. And that's the type of trader I love to teach.
Yeah.
absolutely. So there you have the cash account. I would say if you're going to be a margin account, make sure you have experience. But the benefits of a margin account, it will allow you to trade unlimited number of times each day as long as you're not under the PDT rule. And of course, we're assuming that you're above the PDT rule. If you're under the PDT rule, then this doesn't make a difference regardless because you only have 3 round trips within a week. People with margin accounts can short stocks. And then if you have a margin account, most brokers offer you leverage. I don't mess with leverage. Me personally, I don't recommend leverage. But every trader is different. Um, so, but these are the benefits of having a margin account. So margin call, high risk. If you have $25,000 account and you take a 90,000 position because you use leverage, if you lose 50,000 in your account, let's say it just drops, it flushes out crazy, it just drops. There was a stock last year I did a video on TRXC, I think it was, which was like a China school stock, and it was trading at $108 and it halted going because some news was going to come out, and China was going to shut down the company or something, and when it reopened, it opened up like I think $8 or something like that. So imagine you jumped into that stock with margin, with leverage, and now you're down 50,000 on a $25,000 account. You're going to be negative 25,000. The likelihood of that happening is not uh doesn't happen that often, but just keep that in mind. If you have a $25,000 account and your broker says, okay, you have a 4-to-1 leverage, meaning for every dollar you can multiply that times 4, so $25,000, they give you 100,000 in buying power, and now you take a $90,000 position. Now let's say that stock falls $4, then that's 9,000 times 4, which is 36,000. So you'll be negative 11,000. So just keep that in mind. Like you're just taking there's high reward, but very high risk. And I don't like to leverage. I don't mess with that stuff. I don't know about you guys. Maybe some guys leverage, but it's kind of risky, especially if you're new. If you're new, if you are going to leverage and you're someone that's okay with that, then make sure you have a lot of experience. And one more thing, I'm sorry. So if you're starting off and you're new, right, and you're starting off with small shares, right, like 100 shares, if you can consistently be profitable with 100 shares, then start scaling up. Now say, okay, I'm comfortable. I found a pattern. I know when every couple days I find a stock, and when it forms this pattern and all these things, and it becomes an A+, I'm profitable, and I trade it and I get in with 100 shares, and every time I make about 10-20%. Okay, so now you're ready, you feel comfortable. Now do the same thing with 500 shares. Now, if you can be profitable with 500 shares and you're comfortable, then move up to 1,000 shares. So if you can be consistent and profitable with a small amount of shares, then more than likely you can do it with a larger amount. So just scale yourself up. Don't try to be all gun-ho in the beginning. And using leverage is definitely you're going to be going gun-ho, especially if you're new. It's very risky. Some of the differences between a cash account and a margin account. Cash account, funds available for trading up to cash account value. So if you have 25,000, you have 25,000 to trade, and margin, you have 25,000 to trade, but usually they give you leverage. Funds available, we said only on margin. Ability to short, you can't short using a cash account. PDT allowed. So margin, you could, but no, so you still got to be about 25,000. Potential financial risk is lower with a cash and much higher with a margin. So this is something I recommend, though. If you're first starting new, use a simulated kind of like a paper trading account. There's no risk on it. You're not using real money, but you can practice kind of like finding patterns and all that. This won't replace the emotions that come in when you're actually in a trade with your own cash, but it'll give you some foundation at least. Then you guys have anything to add before we go into the next thing?
Nope, all good.
I like it. I like what you got there.
Okay, so then retirement accounts. We have 401k is qualified as a retirement plan. You get special benefits. You can invest a portion of your salary up to an annual limit. Your employer may or may not match some parts of your contributions. Most companies match 3 to 5%. So if you contribute 3 to 5%, they'll match whatever that 3 to 5%. The money will be invested in your retirement, usually in your choice. And you can usually withdraw any of your money without tax penalty until you're 59 and a half. They can be withdrawn, converted to an IRA. An RA is another type of retirement. They have traditional and Roth. So traditional IRA profits are tax-free while they grow, but taxable when they're withdrawal, right? So some people, let's say they have a high salary right now, but they think by the time they retire, maybe their salary is going to be lower. Maybe they're going to be in a lower tax bracket. Then maybe they'll go with the traditional because they don't want to get taxed right now at the rate that they are in. And by the time they retire, maybe they're going to be in a lower tax bracket. And when, they'll rather get taxed then. Roth is kind of like the opposite. Roth, profits are tax-free while they're growing when they are withdrawn. So, you can't day trade both IRAs and transfer. There's no shorting. There's no leveraging when you have these types of accounts. So traditional versus Roth. Traditional, funds not taxed until withdrawn. 10% penalty on early withdrawals, and better choice if tax rate is lower at retirement. And for Roth, contributions made with after-tax money. So you're taxed as you're putting the money in. Withdrawal contributions are penalty free. Better choice if tax rate is higher at retirement. That's kind of the gist of it. So like right now, let's say I'm at a company and I'm at I'm just a regular position making $60,000-$70,000 a year. And I feel like by the time I retire, hopefully my plan is to move up in the company and be in upper management making $200,000 a year. So this person maybe will want to do Roth because they want to get taxed while they're in a lower tax bracket, and by the time they retire, it's going to be a much higher tax bracket. So they'll choose the Roth for them.
Yeah, just to touch a little bit extra here. So I'm on the executive team for a publicly traded company, and I'll just wanted to say this for all of you who are listening, who are potentially entering a salary position with their company or going into new interviews and trying to gain a little bit of ground in your career. That 401k number, that 401k contribution number, that 3 to 5 to 6% is negotiable. So go get it. Go get it.
What do you think? And that's great point. What do you think? Like most companies, the highest are willing to go. Like, what's somebody shoot for? I know 3 to 5 is a standard,
Yep.
but what do you think? What do you think? Like the most the company can shoot for? Like if they were going to go for a big company.
So we are not against someone asking for 10%, right?
Oh, oh
The
wow.
position has to qualify for it, right? But we're not against also giving above a 6 to 8% on their 401k.
Wow. Yeah, that 10% would be nice.
But no
10%
one
would be nice.
negotiates it, Juan. No one.
No,
does.
you're.
They
I mean,
take what they get.
I didn't think about it. I'll be honest with you. I mean, I didn't even think about negotiating it. Like, that's a great point. I never thought of negotiating your percentage. Like people think it's like a fixed amount, right?
Right.
Yeah, that's a great point, man. That's a great insight. I love that. So if anybody here works for corporate America, and they're out of 401k, and you're at that yearly time for your review, and you're about to sit there, and they're gonna see if you're gonna get a 3 to 5% annual raise or whatever it is. When you sit there, maybe come with a plan. Say, okay, look, this is what I've done in the last 5 years. This is why I feel I'm worth this. I'm negotiating. I want a 5% pay increase. I brought this type of productivity to the company, but along with that 5% annual raise, currently my Roth IRA is at 5% match. I want to get that up to 10%, whatever. And that's something that Brother Malik says it's probably negotiable, like, which I didn't think about negotiating, but you should think about that. And if they say no to 10% and they say, okay, but we'll match you at 7%, well, that 2% makes a difference, like 10 years of 2% extra growth, then that makes a big difference in the long run, especially like if you're at the bigger numbers in your IRA, that 2% makes a big difference. So thank you for that, Malik. Choosing a stockbroker. So this is extremely important to me. If you're a day trader, you need to pick a broker that, if it's long term, it doesn't make as much difference. Going with just a TD Ameritrade or someone, and you're just putting money in there, and you're not going to look at it much. But if you're day trading, you want to make sure that it has fast execution. You want to make sure that it's reliable software. Some people love hotkeys. You want to make sure that the competitive fees, they have competitive fees, direct access routing, right? So like TD Ameritrade for day trading is a little bit slower than others. Like I use Lightspeed. You need to be above the PDT rule, so you have to have more than 25,000 because they're based in the United States to open up, but they're very quick. You get quick execution. Like if I use Lightspeed, if I press Control Z, then in a second I'm out of my position 100%. So you want to make sure that it has all these things, and then competitive fees are very important. Like you don't want somebody to be expensive. A long time ago, TD Ameritrade used to charge I think $10 to jump in, but now Webull and Robinhood, since they're free, they've definitely changed the game. For me, I love, like, I think you're gonna get individual answers. Like I'm just so used to Lightspeed. Like I've been using Lightspeed forever, so I'm used to Lightspeed. But I also have Webull, I also have Robinhood, and I also have TD Ameritrade. And TD Ameritrade, I mostly use it because I like the free software that comes with Thinkorswim. But I don't actually trade. I have money in that TD Ameritrade, but I don't actually use it to trade. I just like the software. I like the Thinkorswim software that they have. What do you guys like to use?
I liked broker wise.
Yeah.
Like my favorite broker would be Interactive Brokers or
Okay, yeah, that's another good one. That's another good one.
or
Yeah.
E-Trade. E-Trade is something I execute on all my scalps. But if I'm I'm trying to start to use Interactive Brokers because their fills are a lot better. I was usually using them for long term as well as a Mary prize, but I kind of want to start using them as a everyday thing and let go of E-Trade because E-Trade, TD Ameritrade,
E-Trade.
yeah, I use E-Trade.
Classic,
Power
man.
E-Trade.
The
Power
classic
E.
E-Trade.
No, I use the Power E-Trade. They made a new version of it.
Oh, did they?
I don't know if you know, but the Power E-Trade's so good, man.
Is
I
it really?
love
I'm gonna have to go check that out. Listen, I mean,
Yeah.
that's what. So back in 2008 was when I really started day trading, because that was when E-Trade came out, right? And I started day trading, man, and it was just garbage, bro. It was just hard to look at.
Yeah,
But
no,
okay, so yeah, I'm
their
gonna have to go take a
original
look at this, man.
platform. Their original platform is so ugly, I'll be honest. But they made an app called Power E-Trade. It's like the same account. But like that's where execution, like I could pick this, I don't know, it's a lot better. I have a more of a perspective on it. You know, especially when I'm trying to get out of a position, it's not as many buttons.
Right.
Yeah. So somebody asked about international. I think Capital is one. Capital is one. I think TradeStation is also international. But I don't really have a lot of experience with international brokers. I don't know if you guys know any.
Isn't Interactive Brokers an international one?
I think Interactive is broker. Yeah, I think Interactive is national. That would be probably the most reliable one that I know.
Yeah.
Interactive. I know
That's
back in the days, a lot of people used to use like SureTrade and these like Caribbean ones, so like they can avoid the PDT rule. But that stuff was garbage.
yeah,
But yeah, Interactive brokers I think is good.
my members from Canada or like London, they use the Interactive Brokers to execute with us.
Yeah, so Ali, I would out of the ones that I've heard of, I've heard of Interactive brokers, and I know of people that they use it, and I think that would be probably the most reliable one out of all the other shady ones. There's going to be some shady ones, especially like anything you see international from the Caribbeans. I would definitely be careful of those. Like you had a Sure Trader that like got shut down because of some issues. So you got to find the account that works right for you. But this is to me important. How important is it for you guys? No problem, Ali. For a brand new trader to paper trade first. Do you see importance in it, or you it really doesn't make a difference to you guys?
Yeah, I mean, listen, paper trading is a huge benefit for a new trader, right? Because I've seen plenty of times where people come in with $20,000 accounts and they're like, "All right, let's go, throw $20,000 into Nvidia right now." And I go, "Whoa, whoa, 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 wait a minute!" Like, let's just go paper trade this for a little bit, right? I mean, are you a new trader? Like, go find out what your plan is, get something together, and really hone in a skill first before you just start using your regular money. I think it's a very good way for you to figure out your laws and your rules that you plan on not breaking while you trade.
Yeah. So one thing like paper trading won't replace the emotion. I'll tell you that much, but it'll give you some foundation. It'll get you familiar on how to execute trades. It'll allow you time to practice new setups. Like you say, okay, I just learned this new setup from module number 7 that we go over. I want to try it out. Try it out, paper trading. But just understand that if let's say you're super successful day trading, don't think automatically you're going to be successful with real money. Like just understand there's going to be an emotional learning curve that comes with trading with real money. What that means is like if I paper trade a position and my paper trade, I'm waiting for a formation to form and I'm still comfortable, even though it dropped a little bit. I know it's dropping into support, and you look at the thing and it says negative $4,000, and you're like, I'm fine, it's because it's still support, it's the trade is still good, and then you end up being positive 6,000 because you saw it through. You may not be able to do that when it's negative 2 or 3,000 with real cash. You might just say, oh no, I'm out. So understand that just because you're success, you have to paper trade, but there's going to be an emotional learning curve. Just know that. Don't go in there with false confidence. Seeing your real money down negative red, even if it's negative $500, is going to hurt a lot more than seeing fake paper money. So just keep that in mind. That's it for that module. Let's see. So that's it. Any questions the next couple minutes? Anything you guys want to add Any charts or anything you want me to pull up to look at, a quick lesson or anything that you guys learned this week or kind of saw this week, that you want to add before we close?
Hey Malik, while we're waiting for questions, man, I like to bounce ideas. So I have a play that you all may want to keep an eye out for
I
next
love it.
week.
Oh, do you want me to give you access to share your screen so you can just share your screen, or you have it up, or you want me to just pull something up?
Yeah, I guess you can give me access to share. That's fine.
Okay, go ahead. So I think you just request share, and it's going to ask me if and I'll give you permission.
Let's see if I can share the right screen here. Screen 2. All right. Can you guys see?
There we go. Yes.
Weeble, maybe. All right. So there's a play here that I've been doing a lot of research on. KPTI. Just looking at the charts here, it had its run up. It had its time in the sun. But if you look at the way it closed yesterday, after hours, right? I think you could see some potential confirmation here again leading into tomorrow, meaning potentially some new highs for this stock. So keep KPTI out on your radars.
Okay, so what would you say? What's your plan for it though? Like, what's your entry? Like, if somebody hasn't entered the trade yet,
right?
What is your recommendation for them to enter? Is it too late to enter? And if they do enter, what would be their stop loss and all that?
So when morning breaks, you'll probably see what we were talking about earlier. We'll see these volume spikes right into the morning if it goes above 1471. So 1471 is your confirmation breaker, right? Let's pull this out just to make sure. Yeah, 1471. Yep. So 1471 is your confirmation. If you break 1471, you're going to build your next leg up, right? And it was just like in that slide that I shared with Juan a little earlier. You're going to see that volume spike, wait for a pullback, and then enter on the next confirmation. Or you can get a little riskier, and as you see confirmation, make a small position and see how it reacts. And then you can set your stop loss to, let's call it 1393 or 1391. And that gives you a little bit of flux here to, fluctuate between you and the bears that could be looking to short it.
Got it. Okay. So
Malik,
how
are you watching anything, Malik?
Personally speaking, I like to watch Spy since we have talks with going to a war. I've been watching Spy recently just because its volatility has been making me a lot of money. Like honestly, all the stocks in the market aren't moving. Like let's say the S&P, any stocks in the S&P are moving similarly to the S&P. So I mostly like to trade the S&P because that's showing me direction. And when I trade it on options, and I use the news, the economy to kind of the reaction of the news in the economy to kind of make a trade. So if I see today or tomorrow, Russia invades Ukraine, I would say, okay, there's a very negative sentiment, and I'd probably be looking to play the lower side. Let me find the lower points on the SPY. So like if you were to go zoom in there, on the daily, right? If you want, just to show the H pattern, right? So there's a specific pattern I like to use. It's called the H, right? So we see a really big drop down to like around 420, and then we see the H pattern, and we're coming back down to that range, right? So the close of all those candles is kind of where I would take confirmation down to your bottom green line, right? Yeah, exactly. So right when we see the first green line broken, we take it to the second. We see it break the second, we take it to the third and even add to our position, right? And I also like to draw a trend line, a downtrend line. So if you were to take a trend line and take it from the top, right, exactly. Oh, beautiful. That's literally where my finger was. Yes, perfect. So we're going to probably see a sort of bounce and squeeze before we get a big drop or a pop, right? I'm not biased, but I'm leaning towards a drop if something were to happen with Russia and Ukraine, especially if you've seen if you watched Biden speak yesterday around 4:30, he was basically saying, I have a spy in the Russian government He obviously didn't say that exactly, but he was basically saying, I have a spy in the Russian government that's basically, intelligence, or he was saying that Russia is looking to invade Ukraine within the next week. Oh. He said, oh. Matter of fact, within the next few days, we have something intelligence that, you know what I'm saying? So with that news, I'm leaning towards a big drop on this. If you guys want to add on to that, please let me know.
Yeah, so from a technical aspect, right? He's looking at this. Now if you jump in, right, and it hits this and it like, you're down in your position because it hits this, breaking this would probably be, your stop loss, right? Because it's possible you jump in and it bounces here and this still becomes resistance and then bounces here, and then this area here would be important because it gets squeezed because this is a resistance area. If it breaks this and it doesn't break this trend, then it's probably going to go down here, and if this doesn't hold, then it might go down here. So this just kind of like giving you the mindset of a day trader. This is how they'll probably approach this, and they'll like this chart because it's below these moving averages. It's on a downtrend. It's not breaking this trend, and it's testing this old resistance, and it's starting to break the old resistance or support. I'm sorry. And then if this old support, if it drops below it, and if this old support begins to become resistance, now that still builds to your thesis even more, and you're going to want to hold it even a little bit longer.
Yeah, I mean, I'd possibly looking to get the puts more likely, because if you were to draw a trend from that low point at 420,
Rare.
yeah, and then you drag it up to those 3 wick points, we kind of see higher. Yeah, I mean, if you were to drag that up to all those wick points, not the lowest point from the 420, but I hope you know what I'm saying. Just drag that line up a little. Yeah. So you see that squeeze that was happening. We closed below that sort of support trend that was on SPY. It literally touched this point and buyers came in. Touched this point, buyers came in. Touched this point, buyers came in. All those days. But yesterday, it touched that point and it flushed it. Right?
Yeah.
So that's leaning towards put side. And I would be looking to short it.
Yeah, so this is like a bear flag, right?
Exactly. And when we get into patterns, we'll see it's a bear flag. We'll see it's also a double top. We'll see
Yep.
it broke EMAs, right? So when you put all of those factors together that are leaning towards the lower side, you start to look at the lower side and pay attention to wanting to catch that lower side move with the patterns, with the volume, things like that, right? It's all just putting it all together, building your own construct or your own hypothesis. If this was to happen, then this is to happen. And if this was to happen, I would take this position here with this is my risk to reward ratio. This is my risk management. And next is your execution while also keeping up with your risk management until you're able to exit the position.
Yeah, DA asked, do you have any moral guidelines in regards to trading, or do you just trade every stock because you hold the position for just a few minutes? Thanks. Me personally, I do have moral guidelines in trading certain stocks. I don't trade certain stocks. First of all, there's an app, that kind of has like a moral compass type of thing, which tells you more about stocks. I don't trade any of the gambling stocks. I don't trade any stocks that really
AMC.
Yeah, any stocks that are just like negative for society, that's me personally. So I don't just trade every stock. Me personally, no, I don't.
Yeah.
But
I'm the same.
but if you even if the lessons here, though, you can apply it to any stock that you do trade. So don't look at, for right now what we're talking about. Even if I was doing this with a stock that I wouldn't trade, like for example, like I said, some sort of, let's say, a pornography company, right? That destroys, to me, in my personal opinion, destroys societies and stuff. I wouldn't trade it. But if we were using it as a lesson, you can take that lesson and apply it to whatever stock you morally do trade. So just don't look at the ticker right now. Look at the patterns. Look at the mindset. I just want you to focus on the mindset, not the tickers. Focus on the mindset. This right here, this bear flag can happen to any stock that you are willing to trade. This looks bearish right now. What he's trying to tell you is he's building a bearish thesis because it dropped so much. Then it's not breaking this trend. Then it dropped again. Then this previous support here, this support trend line, it broke this support trend line here. Then it tested this support here. Now, if this support breaks and it becomes resistance and it doesn't break this trend, then this is going to be bearish for a little bit. And then on top of that, if there's negative news, it's going to confirm that bearish sentiment. It's on a downtrend on the stochastic. So that just those lessons, just apply it to a stock that you're willing to trade to, you know. So if you're morally against a certain stock, that's just the takeaway with this.
Yeah, I'm expecting 410 on it approximately. Just remember I said that.
410. All right, we're gonna put that.
Just remember I said that. Love it, man. I love it.
Let's do it.
I'll put your name on it right here. 410. Our trade.
Hi, I see that screenshot.
Great.
Appreciate it.
All right. I think we got one.
I like that.
You got it, man. So next time when we're on the next module, when do you expect it? No time frame?
March 17.
Okay.
Exactly.
Oh, okay.
You know why, Penny Slayer?
You're talking about the March 16th Fed date, huh?
Uh-huh.
Yeah, man.
And the triple witching.
Yeah.
With
Oh, it's going to be a
expiration.
volatile day for sure.
Just know we're going to see some crazy movements then.
Yep.
I would love you guys in my channel. I'll send you the invite, Penny Slayer. We could all day trade together on that day, catch the puts. That's actually where I get about 80 to 120% average just on the swing for the next day.
Yeah, I love that.
It's like something I back tested for the past 10 years, and I've been doing it for the past 3.
Okay, so we got somebody here. A while ago, I set a goal to make 800 to 1,000 a week. I guess I don't know if you want to add, was it day trading or was it swing trading? Well, that you were setting this goal, if you can just specify that. And lost through Robinhood. My capital was 20,000. It worked for 3 months, and I got busy with working kids. I'm just a starter. Do you guys have anything to add to that? Like,
Samir, keep plugging, man. Keep plugging, right? I mean, you did very well for those first 3 months, but here's a little key, right? When life gets busy, don't try to add trading into your busy life, right? Make trading an extension of your time, right? Don't get into this thing of emotionally making yourself have to trade in order to make those funds per month. And daycare and swing trade. Yeah, no, I hear you. And I assume that you're trying to make this all work to pay for the daycare, but just make
no, that was a mistake, but it was like it worked perfectly. Like he's talking about his kids and he put daycare, but he meant day trade though, day trading.
Oh, got you.
But both of them make sense though.
They make sense, right? I mean, what you really want to do.
Hey,
is hold
on. I'm sorry. Hey, Chris, thanks for coming, man. Thanks. See you next week, hopefully. Thanks for coming. Thanks for dropping by. All right, go ahead, man. I'm sorry.
Keep plugging in, Samir. Keep plugging, because eventually this whole day trading world is going to make sense. I think especially after March 16th, when you see a lot of stocks take its dip, you're going to it's potentially almost like 2020 all over again. I think that there's going to be a rush into the market to buy these new lows, and there's going to be some potential very good opportunities for you to make some really good money in the next few months. So be prepared.
Yeah, and just to add to that, you know, you can trade with these guys. You can trade with Penny Slayer. You can trade with Nart Trade. In March, I'm going to start day trading again. I'm really busy this month, but I'm going to start day trading, and I'll jump on. You know, I jumped on Friday. I didn't really trade, but I just, you know, I discussed some things. We shared some thoughts. I jumped on with Penny Slayer, right? That was this Friday that we just we were there.
Yeah, it was Friday.
And NAR trade too. I jumped down really quick. Kind of, they were watching the SPY, and we just talked really quick. But I'm gonna be a lot more active in March also, and I'll be doing live. And these guys are active every single day. So for sure, you know, March might be a good month. And I would say, like, you know, don't set 100, 800 to 1,000. Maybe just think of, okay, I want to just be profitable every week. I don't have as much time. Let me jump into swaying trades that are high probability, right? So maybe like consider selling some puts, where maybe like selling puts, you know, they usually have like an 80 to something % success rate. You know, you can sell some puts. You're going to make smaller profit. and just say, okay, I just want to be profitable every week. And, I'm going to make small profits and let that add up. And then if I have more time, I'll say, okay, I'm going to dedicate 1 day a week to day trading. So when I jump in March, I know I can't day trade every single day. I don't day trade Fridays anyway. So I'm going to look at my stats and say, you know what, every Monday and Thursday, I have my best days. I'm just going to trade Mondays and Thursdays for now. And, and then if I have more time, I'll add a day or two. But that's my plan. You guys, any more questions? You guys have anything to add? Anything else? So we got NAR trade. His name is stamped here. That's it. This won't be erased.
Yeah, I'm gonna see you. I'm gonna call you March 16th. I'm gonna FaceTime you.
I'm gonna even rename this to NAR chart.
I like that. I gotta screenshot this. Hold on. Just put it in my channel so they know what's up. Yeah.
There you go. Whoa, you got the old school sound.
It's
like
right now.
Well, I mean, come on, he trades on E-Trade for God's sake.
There you go. You got the light. Hey, did that light bulb pop when you took the picture? Okay, so
power E-Trade, man.
So for sure next week is the 26th. I had my dates messed up. For sure 100% positive. I got confirmation. Hopefully NAR trades and Malik can come next week too. Malik and Penny Slayer. I would love to have you guys on again next week. But we're also going to have my boy Sean from We Are Investing. He's a great YouTuber, has a great channel. And for sure Snapback CPA. I got confirmation for both of them. So they'll be on next week also. If you guys want to, jump on that, that'll be great. If any more questions, we're going to close out here. If anybody has last minute questions, please feel free to ask. If not, we're going to close out in about a minute.
Love it, man. Good stuff.
Sounds good, guys. Nice talking to you. See you guys next week.
Yeah, absolutely. All right. Well, thanks for joining, guys. I'll send you guys the links next week and we'll see you next month. Thank you very much, guys, for joining. Take care.
I'll see you.